This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices edged higher on Tuesday, recouping some of the losses from the previous session, as traders focused on supply cuts by the world's biggest oil exporters Saudi Arabia and Russia and a weaker dollar. Brent crude futures rose 23 cents, or 0.3%, to $77.92 a barrel by 0153 GMT, and U.S. West Texas Intermediate crude was up 32 cents, or 0.4%, at $73.31. Prices had eased 1% on Monday on higher expectations that further U.S. interest rate hikes are coming and as investors booked profits after last week's 4.5% rise.
A coming wave of North American liquefied natural gas, LNG, export projects faces staffing challenges that are prompting some of the biggest developers to expand training and coordinate projects to keep construction workers. There are 8 export projects now underway that when completed would add 86 million tons per annum capacity of the chilled natural gas. The projects have already created thousands of construction jobs and are soon to employ hundreds of operators. Paul Marsden, head of Bechtel Corp's Energy Global Business Unit, which has built 30% of the world's LNG plants in the last 20 years, said industry, labor and education must work together to provide the training and workers to staff all the projects.
Moving on to the top news in the energy sector.
Italy has collected around €2.8 billion, $3.07 billion, from this year's windfall tax on energy companies. People familiar with the matter told Reuters on Monday. The tax take is slightly above government expectations. The Treasury in December estimated the levy would yield around €2.6 billion. The levy has a rate equal to 50% of the part of 2022 corporate income, which is at least 10% higher than the average income reported between 2018 and 2021.
Russia will put on hold more 38% of its primary oil refining capacity in July than originally expected, complicating the task of promised oil exports cuts, according to data from industry sources and Reuters calculations. Still, offline capacity is expected to significantly decline from June. An increase in idle oil refining capacity usually incentivizes exports. The upward revision has been made as some large refineries expanded the period of maintenance or mothballing their units. For example, Astrakhan gas processing plant extended the maintenance of its primary unit by 27 days until July 27.
Next, we have the top news in metal markets.
Supply of minerals critical to the energy transition could move close to levels needed to support climate pledges by 2030 after a surge in investment, the International Energy Agency said on Tuesday, provided all projects go as planned. Consultants and analysts have warned of looming shortages due to surging demand for key minerals like lithium and cobalt used in electric vehicles, wind turbines and other clean energy technologies. But after investment in critical minerals, production jumped 30% last year to $41 billion, having gained 20% in 2021. That picture is looking brighter, the IEA said.
Traders and consumers scrambling for alternatives to Russian aluminium sparked a drop in available stocks of Indian origin metal in London Metal Exchange approved warehouses to 18% of the total in June from more than 50% in January. Monday's LME data also showed non-Russian origin copper accounting for a declining share of available stocks, with the proportion of on-warrant copper inventories sourced from China falling to 8% in June from 40% in May. The percentages calculated by Reuters refer to on-warrant stocks, or material not earmarked for delivering out. Warrants are title documents conferring ownership of metal. We will now look at the top news in the agricultural sector. India, the world's second-largest sugar producer and a major exporter in recent years, will likely have a smaller role in the sugar export market going forward as its government-led ethanol program continues to expand, a report said on Monday. According to the report Asia Biofuel Outlook, produced by research firm BMI, a unit of Fitch Solutions, India's pursuit of increased ethanol blending in gasoline, as a way to cut the oil products import bill and reduce carbon emissions, will continue to support global sugar prices. BMI says that there is currently a fast development of additional capacity to produce ethanol in India, where the biofuel is made mainly from sugarcane.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.